you.
Slightly higher than most people had expected, as I alluded to, sitting at around 5.7%. What was your forecast? Did you expect
My forecast
this
was actually 5.6. So I was among those who thought it was going to be a little bit lower. At the end of the day, it doesn't make a huge difference. I think the more important message of these consumer price data is that, yet again, we're a little bit surprised by the volatility from one month to the next of food prices. Previous month, very little contribution. This month, strong contribution. The trend is clearly up. And then the other news was that core inflation, when you strip out food, petrol, energy, you have a situation where after an acceleration earlier this year, it is starting to plateau.
Touching on what we saw in the third quarter, we saw around 4.3% year-on-year, a fair number, but we're so close to breaching that key target range of 6%. Does that concern you? It seems that the Reserve Bank and of course the Reserve Bank Governor Jill Marcus is really focusing on the growth outlook as opposed to what the inflation figures are telling us.
Well, the Reserve Bank is of the view that because you do not have strong growth and because you have slack in the economy, these price pressures that you're seeing now are not going to be of a permanent nature. So they seem to be of the view that even if you breach temporarily the target, and that's very plausible, because as you say, we're not very far from the top end of the target, then it would not last. And once the impact of oil and food is kind of absorbed, we return safely within the target. And therefore, monetary policy can focus more on helping the economy getting out of this low growth phase. There's still always a danger, that inflation surprises you on the upside, for instance, if the rand were to weaken more than it has so far.
Well, let's touch on the notion of stagflation, and something I have actually heard being tabled a couple of weeks ago. It seems that there might be a concern in South Africa. Again, we grapple with definitions with regards to stagflation. It seems that one of the most notable definitions is when we see growth sitting at around 3% and inflation 6%, so twice that of growth. Would that then be a stagflationary environment, and would that be a concern for you?
It is not necessarily a stagflation, because stagflation, I think you probably need to have even less growth, like proper stagnation. At present, we still have some growth in the economy, in particular coming from the consumer sector. But clearly, we have a situation in South Africa where there is some inertia of inflation, somewhere around 5–5.5%, because wages, even though they haven't slowed really to less than 7–8%. Administered prices continue to rise fairly strongly, and the rand is volatile. So if we are to slow, yes, we will have, by international standards, including by EM standards, a growth inflation trade-off that is pretty much unfavorable. It's not a great story.
We mentioned that core inflation sitting at around actually 4.3% year-on-year. It's the same number that we actually saw during the third quarter as well. What is your sense with regards to food inflation? That's ticking up quite extensively. We've got administered prices, which are also going to be ticking up. How can we factor this in going forward?
Well, you were mentioning administered prices and food prices. They're also linked in part, because electricity prices, fuel prices, diesel prices add to the cost of producing food. When you look at food price, and most people thought that most of the inflation was going to come from bread and cereals because of the increase in global price of grain. It has accelerated, of course, but you see meat prices, for instance, at their highest inflation rate in about 3 or 4 years. So clearly we would expect that with global food commodities off their peaks, you should have some moderation, but we could still be in a situation where, in part because of these costs of production, food prices continue to rise at a fairly strong levels for years to come. It's
interesting that you mentioned meat inflation. It actually comprises 32% of the food inflation basket. Tell us about the weighting as it stands right now in South Africa. Are you content with the way that we measure inflation?
Well, you could always pinpoint some inaccuracies, adjust here and there, but unless you adjust the basket every year because you have a good survey of income and expenditure by households every year, which we don't have in South Africa, you are always going to have some imperfections. The last time I tried to calculate the kind of adjustments you could make by changing a little bit the weights to reflect the pattern of consumption over the past 2 or 3 years, I ended up with a figure that was not much different. Yeah. So I don't think there's a big problem of measurement up front.
Okay, looking at this inflation number, we're talking about a possible rate cut by the end of this year. Rates definitely on hold. We had retail sales which were much higher. Rate cuts or not?
I don't think they cut rates further. Look, I can't rule it out because I know that the Reserve Bank is very concerned about what's happening globally and its impact on South Africa. But my feeling is, there's no fire in the house that would require emergency measures. Policy is loose. It is helping the consumer to a certain extent. There are some weaknesses in the economy, but it won't necessarily be addressed by lower interest rates. And inflation is close to its peak. So yes, there's an argument to keep rates low, but it's not really convincing that you should cut them further.